Bitcoin Bulletin, we're diving headfirst into the most explosive crypto news today. Get ready, because the market is shaking. First up, we've got a deep dive into Bitcoin ETFs, breaking down those inflows and outflows that have everyone talking. Then, a major win for Bitcoin giant strategy as they dodge another massive lawsuit, proving their resilience. Plus, get this, Robin Energy is making huge waves, with their stock absolutely skyrocketing after a massive Bitcoin investment. And don't miss the latest from Crypto Fitz as the SEC and CFTC map out the future of spot trading. You do not want to miss this. Stick around, hit that subscribe button, ring the notification bell, and let's get started. Bitcoin ETFs, inflows, outflows, and price moves explained. Ever feel lost in the crypto ETF maze? You're not alone. Today, we're unraveling the complex world of Bitcoin exchange-traded funds, specifically the crucial metrics of inflows and outflows. These aren't just buzzwords, they're key indicators of an ETF's popularity and potential impact on the market, often showing a fascinating, sometimes counterintuitive, relationship with Bitcoin's price. We're diving deep into the performance of two titans, BlackRock's iShares Bitcoin Trust, IBIT, and Grayscale's Bitcoin Trust, GBTC. While both offer exposure to Bitcoin, their journeys and investor appeal have been dramatically different since the spot Bitcoin ETFs launched in January 2024. Grayscale, a pioneer since 2015, faced immediate asset outflows after converting to an ETF, while iShares, a newcomer, experienced phenomenal growth in assets under management. The critical difference? Fees. Grayscale charges a hefty 1.5% expense ratio, compared to iShares' 0.25% initially waived. For institutional investors, this fee disparity translates into significant savings over time, making iShares the clear favorite despite similar market performance from both ETFs. This massive shift in investor preference is evident in the numbers. iShares saw an 82% asset inflow over the last year, while Grayscale's AUM shrank by 17%. The market is clearly rewarding lower fees and BlackRock's trusted brand, showcasing how investor behavior directly influences ETF popularity and, indirectly, the flow of capital into Bitcoin. But wait, there's more to this Bitcoin saga than just ETF flows. Stay tuned as we break down a major legal victory for a Bitcoin titan and a surprising energy company's crypto gamble. Bitcoin giant strategy dodges another lawsuit alleging accounting wrongs. Another legal storm has passed for Bitcoin Treasury giant strategy. Shareholders have dropped a significant lawsuit that accused the company of dodgy accounting practices, breaches of fiduciary duties, and gross mismanagement. This dismissal follows closely on the heels of another scrapped class action suit from May, which also alleged misleading shareholders about profitability under new accounting rules. These legal battles highlight the intense scrutiny faced by companies heavily invested in Bitcoin. Experts note that multiple law firms often file similar lawsuits simultaneously, vying to lead any consolidated case. Strategy, formerly MicroStrategy, stands as the world's largest corporate holder of Bitcoin, boasting 638,460 BTC worth billions. The company's pivot from data analysis software to a Bitcoin treasury firm, spearheaded by co-founder Michael Saylor's vision in 2020, has been a monumental success, with its stock soaring over 2,100% since its initial Bitcoin purchase. While Strategy has navigated these legal challenges successfully, it's worth remembering past regulatory entanglements. In 2000, Michael Saylor and other executives settled with the SEC over charges of overstating revenue, paying substantial fines. This latest dismissal, however, reinforces Strategy's resilience in the face of shareholder litigation. But the good news for Bitcoin doesn't stop there. Get ready for a stock market shocker, as an energy company's Bitcoin bet sends its shares through the roof. Crypto Fitz, Bitcoin holds steady as SEC and CFTC signal path for spot trading. In the evolving landscape of digital assets, key regulatory bodies are clearing the path for more mainstream adoption. The Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, have recently provided signals that indicate a more defined route for the spot trading of Bitcoin. This development is crucial for the broader cryptocurrency market, suggesting a move towards greater regulatory clarity and potentially more accessible investment opportunities for a wider audience. These signals from the SEC and CFTC are not just bureaucratic updates. They represent a significant step in the maturation of the crypto market. By outlining a potential framework for spot trading, regulators are addressing long-standing questions about oversight and investor protection. This clarity can encourage institutional participation and provide a more stable environment for both existing and new investors to engage with Bitcoin and other digital assets. While the specifics of the proposed paths are still unfolding, the overall sentiment from these influential agencies points towards a future where regulated spot trading of Bitcoin becomes a more established reality. This could unlock new avenues for investment and further integrate cryptocurrencies into the traditional financial system. But the regulatory world isn't the only place making big Bitcoin moves. Prepare for a seismic shift in the energy sector as one company's massive Bitcoin investment causes its stock to skyrocket. Bitcoin investment drives Robin Energy stock up 100% as company allocates $5 in BTC. In a stunning display of market reaction, Robin Energy Limited has seen its stock price surge by nearly 100% intraday after confirming an initial $5 million allocation to Bitcoin. This strategic pivot in treasury management for the International Energy Transportation Company marks a significant step into the digital asset space, executed through Anchorage Digital Bank NA. CEO Petros Panagiotidis highlighted Bitcoin's scarcity and digital nature as key factors aligning with the company's long-term growth and shareholder value objectives. This move positions Robin Energy among a growing cohort of public companies, like Strategy, that are actively incorporating cryptocurrency into their treasury and risk management strategies. Robin Energy becomes the 110th company to hold Bitcoin on its balance sheet, signaling a broader trend of diversification in corporate finance. The market responded with immediate enthusiasm. Robin Energy shares, which had been trading around $1.87, leaped over 130% in pre-market action and hit an intraday high above $4.20 on September 10, 2025. While the stock saw some pullback by the market close, ending the day up 20%, the initial surge demonstrated a strong investor appetite for companies embracing digital assets. The significant increase in trading volume further underscored the market's keen attention to this development. What a whirlwind of Bitcoin news! But before we wrap up, let's hit you with a rapid-fire recap of today's biggest stories. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin ETFs, led by iShares, attract massive inflows while Grayscale faced outflows due to high fees. Bitcoin giant Strategy successfully dodged another shareholder lawsuit, proving its resilience. Robin Energy's stock exploded nearly 100% after a $5 million Bitcoin Treasury allocation, and Crypto Fitz reported on the SEC and CFTC, signaling a clearer path for spot Bitcoin trading. Don't miss out on any of the action. Smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, ring the notification bell so you never miss an update, drop a comment below with your thoughts, and follow us on all our social channels for more. We'll see you in the next one.